Hello, my name is Rami Shorty. I'll be presenting with my team, John, Tristan, and Hank, about the functions of the U.S. Export-Import Bank. Short, I'll be using EXIM, and other multinational banks. So if we look at overall internationally, mainly the two that we're kind of going to highlight are going to be one in the U.S., the EXIM Bank of the United States, as well as the European Union Bank, which is the counterpart to the US. So basically, in the US, when private sector lenders are not willing to provide financing to small businesses or any US businesses, that's where Exim Bank steps in and fills that gap and helps them with financing and all the tools necessary to compete globally and internationally. European Union has their own bank as well, and they essentially are there to improve people's lives and provide finance and expertise for projects supporting innovation, subject matter expertise, infrastructure, and climate action. And they do that by lending capital and advertising efforts. Both banks are there really to improve the local business ability to access international markets from both import and export perspective. And the hope is to increase the jobs in the respective countries. Since we live in the US, we figured we stick to the United States mainly, so the discussions will involve really the activities that the bank has been able to do in the past year, and this is the leadership team for the Exim Bank. They have several regional export finance centers in the US. There's about, I think, 11 of them. So they're shown on the website as well. The mission of the bank, and that's stated in their annual report that's also available online, and we'll provide you guys the link, is other than that they are the official credit agency of the United States, they're an independent, self-sustaining agency that exists to support American jobs by facilitating the export of the US goods and services. And supposedly this is all at no cost to the US taxpayer. The Exim Bank does this in two principal ways. One, by providing access to export finance, and this export credit and insurance allows the small businesses to access working capital. Secondly, the bank allows for leveling of that competitive field that I'm talking about, the international competitive field. And they offer financing to counter what other competitors may have internationally. So the Exim Bank, in a nutshell, assumes credit and country risks that private sector is really not willing to accept. So if we want to take a look at, really if we were to learn from it as a business or look at what they've been able to do from examples in the industry, they highlight several stories in their annual report. One story talks about this company in Memphis, Tennessee, Classic American Hardwoods. And this effort, the bank allowed the plant to hire 60 workers. So that's adding jobs to the US economy. The bank was viewed by the CEO as an integral partner with international business, allowing the company to enjoy growth and success over 8 years. And they've achieved this by reducing international buyer non-payment risks. So that's when the buyer doesn't pay. We're talking about international buyers. Providing credit line to the customers as well, increasing the U.S. export borrowing capacity, and conveying single or even double buyers in multiple countries, or covering, sorry. Another story was the Thrustmaster of Texas. This is in Houston, Texas. They helped them compete abroad, expanded their exports, obviously, and increased the jobs in Texas. And that they benefit from the capital guarantees that they have, which enables U.S. exporters, mainly small and medium-sized, to obtain working capital from the qualified commercial lenders. So they essentially back those loans up. Otherwise, those lenders wouldn't be providing them. A third story discussed is another company in Pennsylvania. So they seem to have a pretty good portfolio of companies that work with. And this one is called Leonardo. They used the loan guarantee, which impacted this manufacturer in terms of taking their helicopters and having the customer abroad being able to afford them. So the director of the company explained that several of their foreign customers worked with the Exim bank to finance their aircraft purchases, and as a result supported the sustaining of over 500 jobs. So that is a big deal.
So now we'll talk about some of the pros and cons of the Exim Bank. As Rami mentioned earlier, that Exim Bank is willing to take on risks that the private sector is not. Typically, these are credit and country risks. This bank is a secondary option for U.S. businesses that are trying to grow through exports. Exim provides sufficient financing to these companies when there is not adequate financing through commercial banks and capital markets. In the last year that Exim was fully operational, they supported $27.4 billion in U.S. exports. They were also willing to support exports from other countries into the U.S. if there was enough U.S. materials being used in the product, and it was also assembled in the U.S. Let's see. When U.S. companies can grow sales abroad, they can grow jobs at home through the added manufacturing, distribution, and sales. Another pro is Exim helps American companies win major procurements in foreign markets. Many of the multinational banks don't always play by the rules or industry standards, and Exim Bank helps minimize this unfair advantage so the U.S. companies can compete with the quality of the foreign products. Some cons against Exim Bank. So although Exim claims that they operate in an area where private lenders don't, there's little evidence that supports this. 98% of all exporting firms are small businesses, and they're growing without any help from Exim. They're doing this by working with wholesalers or other buyers. Exim programs are not subject to fair accounting standards. If they were, they'd be running at a deficit. If you look at page 53 of the link that we provided you for the financials, Exim's 2016 financials show that they had a loss of $849 million. Also, in 2014, Congressional Budget Office reported that the bank requires additional funding and will cost taxpayers $2 billion over 10 years. As we spoke about earlier, they mentioned that it wouldn't cost any taxpayers any money, but unfortunately, this is something that was misstated. In some cases, Exim Bank actually helps foreign companies compete against the American companies. This can be seen in the airline industry, where the bank has provided financing to foreign airlines so they can purchase American aircrafts. The foreign airlines are utilizing this subsidy to offer lower prices to the American companies, offering lower prices that American companies can't compete with. So you can see that Boeing ends up being one of the largest benefactors of this subsidy. The majority of the financing goes to Boeing and GE. Exim is a broad definition of a small company, which happens to be a company that has 1,500 workers and with revenues of $21.5 million, which, in my opinion, is a more medium-sized company than a smaller business. There also is widespread institutional corruption, including credit for unqualified companies, and lack of internal controls, including heavy salary spikes and bonuses admitted to employees that are admitted employee fraudsters. There's also a lack of basic transparency. There was a line item for $25.6 billion in activity under the heading of undisclosed, and they determined that $1 billion of these transactions were actually in Russia. So that'll end it for the pros and cons.
So Exim Bank receives its funding from the Export-Import Bank Reauthorization Act of 2015. Like any other government entity, it is subject to a government shutdown. This act actually ends on September 30, 2019. For a brief period in 2015, the bank was actually shut down for almost 4 months, from September 30th until December 4th. This also creates kind of a question in your mind of whether or not there is any responsibility for the U.S. taxpayers. If we go on to the next slide, you can see that the Exim Bank offers 4 products. The first is a loan guarantee program, and this guarantees repayment risk on foreign buyers' debt. If they do default, they will repay the lender the outstanding principal and interest, and it guarantees up to 85% against commercial and political risks. The direct loan program offers a fixed rate loan. There are medium-term repayment plans for 1 to 7 years and long-term repayment plans in excess of 7 years. And this covers up to 85% of the U.S. contract value. You can also purchase export credit insurance, which is coverage to the U.S. exporters that are selling goods overseas. This offers coverage for up to 95% of losses and allows exporters to extend credit to international customers as well. The last part of the offer is the working capital guarantee program. This provides repayment guarantees to the lender. They'll give you a line of credit so you can purchase products for export. You can do this on a single loan or a revolving line of credit. There is no transaction value that they put a limit on, and this does have lower collateral requirements than traditional lenders. We take a look at their financials. This is 2017 versus 2016. This is their balance sheet. To give you an idea of how much this does affect us as taxpayers, if you look about halfway down the slide, you see that borrowings from the U.S. Treasury are now at $24.6 billion. This is stated in millions. Last year it was $25.2 billion. Most of that is in loans receivable, which would make sense for a bank. They have reduced a little bit. They were 23.5 billion last year. Now they're at 20 billion. If we go on to the next slide, it'll give you an idea of why it's a little interesting to us as taxpayers. They report their cost over their revenue, and as you notice, their costs are on top, which is not usually an accounting standard. But their costs far exceed what their revenue is, which means they are probably covering a lot of those insurance programs they offer. They only had a net cost versus revenue of a negative $188 million for 2017. And it still seems to beg the question that how is this not a liability to us as taxpayers? As we stated, we will send you the link to their yearly report. This concludes our informational section about the Ex-Im Bank.